Hey everyone, welcome back to Nadlin Forum Podcast Daily. I'm Ruby Sturt, here with Lyle. Big news for anyone who's even half looking at the property market right now. Mortgage rates have hit a new 11-month low as of what? September 15th, right?
Yeah, that's right, Ruby. Actually, we've been watching this steady decline for 4 months now. The numbers just keep drifting down. Not huge drops day to day, but over time, if you compare to what we had back in, say, early summer, it's a pretty noticeable shift.
It's so true, for people tuning in who aren't glued to mortgage charts. The big thing is the most dramatic drops were right after those soft jobs reports in August and again in September. Not the best news for the job market, but investors took that and really flipped their expectations for the economy. I remember, this is a bit of a tangent, when I was first hunting for my apartment in Sydney, every tiny rate change felt like it changed, everything. 1 week I'd be right on the edge of affording. The next it was like, nope, back to the grind of flat inspections and eating more rice than I'd care to admit.
That actually lines up with what a lot of my clients here in New York have felt. Even slight differences in rates can tip someone from being able to buy to, let's wait it out. But this past week, most headlines are saying the same thing. We're at the lowest rates we've seen since last year. Not by a huge margin compared to last week, but the overall sentiment's changed. And it's driven mostly by those job numbers setting the tone, making people think maybe the economy's not as hot as they expected.
Exactly. And for anyone sitting on the fence, it's kind of tempting, isn't it? But as you're probably about to remind me, nothing stays still for long, especially in this market.
Yeah, that's true. I mean, we've got fresh economic data coming out literally tomorrow. And Wednesday, we've got the Fed making their latest announcement, which, look, if you listen to this podcast for a while, you'll remember we talked about how bond markets react almost instantly to any surprises, right?
They really do. And actually, back in episode 5, we covered how sometimes those Freddie Mac surveys lag so badly. By the time you see the rate in the news, the market's already jumped somewhere else. Just a little throwback for our diehard listeners, not to get too technical for new folks.
No, exactly. It makes sense. Because the bond market is what really sets the pace for mortgage rates. So these next couple days could get bumpy. I remember right after the Fed announcements in 2022, I had a client. He was buying in Brooklyn. The Fed did something totally unexpected. Rates literally changed between his morning coffee and when his mortgage broker called after lunch. Makes you sweat, right?
Oh, absolutely. And you can't plan for that stuff. I always get a bit nervous when I hear Fed announcement and pending statement in the same breath. So that's really what everyone's waiting on now, right? We've got really good rates today, but if either the economic numbers or the Fed statement go sideways, the market could react really fast. Like blink and you miss it.
Right. And honestly, the volatility isn't just a headline. It's real. So if you're thinking, wow, rates are low, maybe I should jump in, you might want to pay close attention over the next 48 hours.
So if you're wondering what to actually do about all this, do you lock in your mortgage rate now or do you wait? That's kind of the big money question, isn't it? Leo, I know you've got opinions here.
Oh man, always. I mean, here's the thing. Locking now could save you a lot of stress, especially if you don't like risk. Rates are attractive today, but if tomorrow's economic report or the Fed goes hawkish, suddenly you're wishing you pulled the trigger earlier. On the flip side, if the data's weaker than expected, maybe rates dip a bit more. But that's a gamble.
Totally. And sometimes waiting for the perfect bottom just means you miss the best window. I actually met a borrower who, this was a few years back during a different wave of volatility. She acted super fast, locked in that morning after a sketchy jobs report dropped, and by the afternoon rates had jumped back up. Her friends who waited missed out, and she was practically celebrating for weeks. There's a lesson there somewhere, maybe luck, Maybe just nerves of steel. Who knows?
Preparation is everything, really. We always say on this show, keep an eye out for new data. Like, don't just follow headlines, watch the real numbers, and work with your broker or lender. Because as we've learned from previous episodes, being a few hours ahead can literally save you thousands. Don't forget, volatility isn't going anywhere. If you're a buyer or thinking about refinancing, stay proactive, stay flexible.
Couldn't agree more. Timing's tricky, but being informed, that's your best shot. All right, that's it from us today. We'll keep you posted when the data and Fed news hit. Don't worry. Leo, always fun chatting rates and close calls with you.
Same here, Ruby. And thanks everyone for listening. Good luck out there, and we'll see you on the next episode.
Catch you soon. Bye.